Hello and welcome to the Dash News podcast. I'm Mark Mason and this is episode 102. And joining
Dalmatians.
me is my guest host, Joel Valenzuela. Not guest host, co-host. My apologies. How's it going, Joel?
Well, apparently I'm a stranger in my own backyard here, but yes, I'm doing well.
And joining us again, I think it was 3 podcasts ago, but sadly there were some connection issues, and we started the campaign #Free Demelza, and she out of the cafeteria. So welcome back to the podcast, Demelza Hayes, who is let me get this right, I put it in the title, you are a cryptocurrency asset management research analyst.
And
correct?
Escape room enthusiast.
Yeah.
Escape room enthusiast, that is correct. Thank you for having me again on your podcast.
I'm just happy that you made it out alive. It's like people are generally worried in the live chat saying, is she okay? But, you know, it's all good. We really wanted to have you on last week, but and the following week, but we had someone from Core on, so already lined up. So, but we got you back now. That's the main thing. So anyway, let's start off with a bit of fun. Demelza, what is worse? Being trapped in the office cafeteria with no battery life on your laptop, or sitting next to a hyperactive Ripple fan on an 8-hour flight?
Oh my gosh. Definitely sitting next to a Ripple fan on a flight, because at least in a room, I'm like trapped alone. Alone in the cafeteria, whereas on a flight, I would be like a captive to the Ripple.
Yeah, because
yes, to someone else's thoughts. So what you're saying is you will not do a celebrity boxing match with Tiffany Hayden.
I had some tweets back and forth with her. I mean, is this person real?
I believe so. Ladies,
oh my god,
that is pretty funny because I believe so, because I knew her and interviewed her before the XRP days, back when it was just Bitcoin. I do remember there's some Cointelegraph article about the downsides of living unbanked, because she was living unbanked off of Bitcoin at the time, not by choice. I was by choice, but she was not by choice, because she had again, all public information that she talked about in the article. She was going through a divorce, and as such did not have a permanent address where she had like utility bills in her name or whatever sent. So a bank would not give her, of course she couldn't use her ex-husband's bank account, so she couldn't get her own because she didn't have a permanent address. So it was just one of those awkward things. And so yeah, that was kind of my introduction. And then I believe she ran for a Libertarian Party, something in some kind of congressional position in the US. And then over time she got very into Ripple, and then now there's a lot of that, and there's a lot of people saying she's a bot, but no, she exists. She is a flesh and blood human being. I don't know. She was. I don't know if something happened along the way and she got taken over by the Terminator or something.
I don't know, but I mean, Ripple has like a negative user acquisition cost. I mean, they can buy users. I mean, and that's what they did. Like, they had a DevCon, like a Ripple convention in, I think it was Las Vegas, like 4 years ago, and everyone that went got 50,000 XRP.
Well, let's get into it, because that, all jokes aside, I did bring up Ripple for a good reason, because previously on the last podcast, we did briefly speak about the XRP army and you having some run-ins with some trolls on Twitter, but we never really established why you're not a fan of Ripple. I'm guessing, was you vocal about Ripple because you're?
Is it because they locked you in the closet before you could say so?
Yeah, I mean, being absolutely real, is it just what don't you like about the Ripple project? I'm guessing you just researched it and looked into it, and what is it that you like?
Yeah. Basically, I mean, there's a whole bunch of reasons. So I write this report called the Crypto Research Report, and we had an article that we were doing on Ripple. And when we were doing the article, a lot of pretty big questions came up, and there was no answers available online. I think that one of the reasons I don't like Ripple is because they're sourcing liquidity from retail investors who are basically kind of trading on different marketing news that comes out. Like, for example, a new bank is experimenting with Ripple. But the problem is that if you actually dig into Ripple, there's 3 different Ripple technologies. There's XRapid, XCurrent, and XVIA. I don't remember the last one. But basically, the ones that the banks are experimenting with do not need to use XRP, the token. So whenever a bank is announced as a new user of Ripple network, it doesn't mean they're going to have a demand increase for XRP. So I think that a lot of retail investors are not actually understanding what the value proposition here is of XRP. That's the first thing. And then the second thing is that I think that it's a pretty fine line that the Ripple network, that the Ripple company is walking between bribing people to use their technology, which is what they're doing. I mean, okay, you might not call it a bribe, but they have a negative customer acquisition cost in the sense that they can pay a bank, you know, $1 million or 2 million or 100 million worth of Ripple to use their product for a certain amount of time. And then during that time, the price of XRP goes up, and then Jed McCaleb and his family members and other people who held XRP from the beginning can sell into the bull market. So I mean, I think that it's like, for me, I wish that they were being more honest. For example, I'd like to see in their disclosures, like, they have really nice disclosures. I think that's a great part of Ripple. But I'd like to see in those Ripple disclosures how many banks are actually using XRP, not using Ripple. How many banks are actually using XRP, because they don't publish numbers on that.
Yeah, so at this point, it may be more or less of an illegal security in that people seem to be buying the XRP token in an expectation of owning or sharing in part of what's going on with these integrations. But really, the XRP token itself is not being used, so they're not buying something that's being used. And even though the company that issues them they're kind of buying shares in the company, but they're not actually buying shares in the company. It's just sort of shares unless you actually ask if they're shares, in which case, no, they aren't. Is that a fair assessment, would you say?
Yeah, I mean, it depends. Like, in the US, like, each country has its own, securities, what determines a security. And in the US, I guess definitely some of the exchanges and some of the regulators think that Ripple might be a security. But on the other hand, for me, it's not a security because there's no investment potential. I mean, once I would only think of a security as something where I can actually have some kind of investment, like, contract. But with, like you said, when you buy XRP, you're not actually owning shares of the company Ripple. You're not actually, it's not clear what you're actually buying when you buy an XRP share, because it's not a profit sharing mechanism. It's not a debt instrument. It's not a equity instrument. So I don't know what it is, really.
Yeah, sort of like this little Dash coin I have. It's not made of a precious metal. It says Dash. It has a Dash logo on it, the old one at least. And it's kind of representative of Dash in some way, but it actually has no Dash associated with it whatsoever. And people say, oh, wow, look at what Dash is doing over here. They just implemented this new technology. I'm going to buy hordes of these coins. And then the coins go up, and then they pay off the banks with a bunch of these coins. Or like, hey, Uphold, are you going to integrate Dash? If so, we'll give you a basket of these coins. It's it's a very strange kind of lesson in economics right there.
I mean, I could spend a gazillion, because we postponed the article twice because we didn't want to be sued for libel, and that's why we're making sure that all the statements we make are completely accurate.
Because we know that's very fashionable in the crypto space these days.
Well, yeah, and Ripple's definitely not somebody I want to mess with. And I actually had people that investigated it, like programmers that could actually download a Ripple node and figure out how the private keys work and all that kind of stuff. And I asked, would you be willing to co-author this with me? And they were like, absolutely not. Like, we're not getting on Ripple's bad side. So
well, there we go.
Wow. And also as well, that I think on the previous podcast, you're saying that you're a big fan of money, right? In the sense that, you're passionate believer in proof of work. So clearly that is parallel to Ripple. But let's move on from Ripple. I've got a sensible question for you this time. on the last podcast, you mentioned that you were researching the relationship between hash rate and price. I think you said you was working on a paper or writing a paper. This week, the Dash hash rate is at an all-time high. Does this mean Dash is going to the moon?
Wow. Oh, great. Well, that's good news in general. I mean, that means that people are willing to actually give up costly resources in order to secure that network. I think that's a really great sign. Unfortunately, from my research, I've only looked at the proof of work relationship for Bitcoin's price. So I haven't done data analysis on Dash, but with Bitcoin, it's not really that clear of a relationship. Because, for example, like you would want to say like, okay, the hash rate, if the hash rate increases, then like if the hash rate increases this week, then hopefully next week we see the price go up. So maybe it's a lag of 1 week. There's a delay of 1 week. But actually with Bitcoin, my data analysis showed that the lag is closer to 9 months. And I think that's because it takes so long to get the equipment and to get the mining facilities rigged up and everything like that, so that all of the mining hash rate that we see on the network now is from decisions made almost a year ago. So maybe with Dash, like how does Dash mining work? Like, can people mine it with GPUs, or is it only with ASICs?
So at this point is only with ASICs. It was designed. That's the thing, is there is no such thing as ASIC resistant, in that you have to constantly change it over time. So Dash is definitely an ASIC coin. So that's another thing to think about. Like when I see, because I did a couple of articles about the hash rate reaching new all-time highs and stuff. So one thing's for sure is it seems like the hash rate goes up with the price. It seems like when the price collapses, it doesn't really go down. It kind of stays stagnant as people hold out until the price goes up. And then it experiences bumps, usually around new hardware coming out that makes it more efficient. And so it's clearly that there's a lot, clearly the price goes up and down, but investment and innovation behind Dash keeps going up at a relatively constant pace. What I would be interested in seeing is, rather than judging the hash rate, the investment in the hash rate investment, as in how much it costs at any one given time to have that kind of a hash rate in it based on mining technology. Because then when the hash rate goes up, but the price is stagnant, what if the price invested in mining is the exact same? Because people, it becomes cheaper to mine with new hardware. That would be something I'd be interested in tracking. I still don't think it would track price exactly. I still think it would be a little bit, it would kind of lag on the uptake, and it would definitely lag on the downtake, where people just sort of, I'm going to hold this out. I'll have a ton of Dash that then when the next bull run comes, I'll sell. That's kind of my expectation, but it'd be good to track it versus price of mining.
Yeah, good point. I mean, I think it's kind of like a chicken and an egg problem. I mean, if you look at gold mining, for example, I mean, I think that people mine gold because they have the expectation that gold will have value tomorrow and they can sell that gold tomorrow. And then they have, huge companies that do this on a regular basis. And I think it's definitely makes sense that if the price of Dash goes up, more miners will mine Dash. That makes sense. So you could argue that's the direction that this relationship goes. But on the other hand, you could also argue that if miners suspect that Dash is going to be going up in the future, they could start mining today and basically earn more Dash and sell it for more tomorrow. So I mean, I think that the relationship is really reversely caused. There's it's bi-directional.
That's really interesting, and I'm really happy you brought up gold, because so we was just talking about the relationship between the hash rate and the price, and I downloaded the latest edition of the crypto research report, and I noticed that there was a section that focuses on the relationship between gold and Bitcoin. Can you just talk a little bit about that?
Sure, definitely. I mean, basically, at Incrementum, we but we started out. So Incrementum has had a 12-year relationship with gold, let's put it that way. They've been producing a big report on gold, and they have gold funds, and they're heavily invested in gold. But at the same time, they wanted to kind of, introduce the digital gold of cryptocurrencies to their business model. And that's why they hired me 2 years ago. And we started out looking at like various cryptocurrencies, but in the end, we really just decided that for us, we want to focus on store of value and medium of exchange cryptocurrencies, because we think that those match gold. That's where we have our expertise. We have our expertise with coins that are going to be used as digital gold, basically. And in that article, we basically define a trading strategy where you can use gold and Bitcoin and use rebalancing bands in order to kind of reduce some of the volatility associated with cryptocurrencies, while
Uh-oh.
Oh no.
Oh, please no. Come back to us. That was so good as well.
Yeah. So the relationship between digital gold and analog gold, as it were.
Yeah, I mean, I think it's an interesting one, because while we wait for Demelza, because when I often think about this, we're all kind of we some people always talking about
there
the
we
next
go.
Okay, I was just talking about, like, I was going to say about gold in itself, because we know how gold performed last time we had the financial crisis towards the end of 2008, start of 2009. But like when the financial crisis was happening, Bitcoin didn't exist then, right? It was only just coming into existence. So we don't really know how it will react to another financial crisis in that event. However, it's been like a decade, and we've got this whole new generation. In fact, if you've been alive for more than 10 years, that's how long Bitcoin's been out.
I have, in fact.
And now all these kids, have their phones surgically attached to their hands because they're just so tech savvy. Like, I don't know. Now, I'm sure people out there that understand sound money and advocates of that will always have a fond outlook towards precious metals, right? Because it's sound money. And, they've obviously looked into how central banks and fractional reserve banking works, and they know what money should be, and the dangers of central banking and fractional reserve banking and the problems that leads to, right? But I'm not sure. I know Max Kaiser in the past has said that he believes if the next financial crisis, like, the youth today are going to will flock much more. He believes they'll flock more to cryptocurrency more than precious metals, because one, it's more easily accessible, right? It's online. Plus, when you look at places like Greece and stuff, when things, hit the fan over there, some people were trying to buy precious metals, but like when you look at these situations, when they actually happen on the ground and there's real hardship, there's problems. Venezuela, people getting gold confiscated at the borders. But, even Greece itself on the island, people end up bartering with cigarettes and toilet roll and things like this. So I think when it comes to safe havens, right? Now, traditionally, if you're a hedge fund with lots of money and traditionally you trade Forex, right? Because it's a very liquid market. It's 24 hours, right? So that's very liquid. You can release all those funds. But buying up physical, or for like a retail person or man on the street, that's a lot more difficult. And I think cryptocurrency is a lot more accessible, and it's out of the kind of, I don't want to say the establishment's hands, but like, you're really taking control of it, right? You're not dependent on third party. There's no third party risk within that unless you leave it on exchange, which is a no. So I don't know. What do you think about that? Because surely when you speak to investors, which you do, large investors and medium investors, they must ask you your opinion on this. Like, what do you anticipate to happen in the next? And we can't speak in certainties because this hasn't happened, right? We haven't had a financial crisis where cryptocurrencies have been out. But like, what do you think?
Oh man, there's so much to unpack there in that question. Let's see. Well, first, a lot of the investors we speak to are older investors that are in the German-speaking countries. So they're generally more comfortable with gold and commodities than they are with cryptocurrencies. So that's because that's the, our older people. That's how life works. But, over time, of course, that's going to change. And I think that some of the more kind of, older people that are kind of realize the value of cryptocurrencies, I think they, for example, ever since the metal detector came out, you can't flee with your gold anymore. I mean, I can't get on a plane and flee with, and plus it's heavy, right? Like you mentioned, it's just not something that's easy to move, to flee with compared to crypto.
So you got to get some gains. You got to practice lifting your gold up and down the stairs so you can. Yeah, I know. I get the point. It's not very convenient.
I mean, did you see the new commercial today? Drop Gold by Barry Silver, by the Grayscale Investment Trust. I mean, it's about trying to tell people that Bitcoin has some advantages, or the asset he holds in his Grayscale have some assets, some advantages, gold, and I totally see that. But on the other hand, personally, over the past 5 to 6 years, me and the co-fund manager, Mark Volek, we have both used the strategy of selling Bitcoin once it gets to a certain amount of our portfolio's allocation, we sell Bitcoin and buy gold. That's what we both did. And what that did was it allowed us to manage Bitcoin's volatility. So we didn't get all of Bitcoin's peaks, but on the other hand, we didn't lose all of Bitcoin's max drawdowns either. So Bitcoin had 3 max drawdowns of over 80%. And if you actively rebalance back into gold with rules where you don't break the rules, then you can somehow, historically, you were able to manage some of Bitcoin's volatility. But in general, though, I think overall, it's theoretically a super interesting juxtaposition between gold and Bitcoin, because, I mean, on the one hand, like, gold mining doesn't secure the value of gold. It's Bitcoin and Dash and other proof of work coins. Like, the more miners that join the network, the more security the network has, and the higher the value of the cryptocurrency can be. I mean, value subjective, but we can all subjectively value it higher because it's more secure. Whereas with gold, it just doesn't work that way. And there's a lot of subtle differences between gold and Bitcoin that make it interesting to analyze.
Yeah. Okay, so now that we've got you back and the connection seems a bit better, in the community at the moment, I keep getting asked this, and I keep seeing it coming up in our community Discord. People are asking about stablecoins, and I think you've looked into stablecoins before. I don't personally have an opinion on them because I've not spent that much time looking into them. I've seen the drama with the USD Tether recently, but drama put that to one side. Stablecoins, do you love them or hate them? What are your thoughts?
Well, I think what a stablecoins investment pitch is, you are kind of trading stability in exchange for a potential blow-up risk, potential catastrophe. I mean, basically, stablecoins are going to be stable until they're not, and then it's going to be a huge blow-up risk, right? So, I mean, you're trying to get stability out of this asset, but the day is going to come when the peg breaks, or the bank where you store your collateral is frozen, or, I mean, there's a whole bunch of different variables here, or somebody embezzles the money. I mean, there's all sorts of variables here where the stability is impossible to keep in the long run. I mean, and we saw this with the European exchange rate mechanism that George Soros successfully attacked in the 90s. And people have tried to keep fixed exchange rates for dozens of decades, if not a century now, and they have not lasted. However, that doesn't mean that the dream of a stable currency is not one that makes sense. I just think that, I mean, I guess overall I'm kind of a lover of stablecoins, in the sense that I think we need to get people on board with cryptocurrency. And right now, a lot of people are they can't use crypto because it's too volatile. And in the long run, we want to reduce the volatility, of course, but until that long run comes, stablecoins in the interim might be feasible. I don't know.
Yeah.
What do you?
It's weird because it's very polarizing, because some people really like them and then other people really dislike them. It seems the people that like them tend to do a lot more trading. So that makes sense, right? Because they're utilizing that. But the people that actually, believe in the project that, of these cryptocurrencies, they're thinking end game, right? So for them, stable coins don't make a lot of sense to them. They're just like, well, why would you be trading? Like, you want to get out of fiat, you want to hold these cryptocurrencies. So I think there's two different tracks of thought. So I think it's about the methodology and how you're going to be utilizing them. I can understand why exchanges want to use stable coins. I think Wirex, the cryptocurrency debit cards, working with Stellar at the moment, and they're creating a number of fiat kind of stable coins, because I think that allows them to send stuff a lot more easier, right? So I can understand why exchanges and cryptocurrency solutions are using this to kind of get around certain situations, right? But end game wise, for me personally, as kind of a self-confessed Dash maximalist, there's always going to be a transitional phase, right? And just like these cryptocurrency debit cards that still rely on the legacy-based system, right? Visa, MasterCard, it's not the ultimate. But I know merchants aren't going to overnight just drop their previous point of sale solutions and just accept cryptocurrency, and they're not going to have one or the other. Like, they're going to slowly do both and then hopefully move over to the other one based on the advantages, right? So I don't know, Joel, what do you think? Because like I'm undecided on stable coins. I'm not a trader myself, so like I just haven't really felt the appeal. But
well, generally speaking, as far as you comparing a stable coin to a real asset like a cryptocurrency, it reminds me of the reason I got into cryptocurrencies, is because I wanted to get away from fiat currencies, i.e., has value by fiat because we say so. And stablecoins in effect are kind of fiat, is in there's the money that only has value because the central bank says it does. And this says it has the value of this already kind of dubious thing. So it's like very shaky, again, with the blow up event, right? Anyone can say, oh, the US dollar has it's the dollar is king, and all that kind of stuff, until it blows up. But then the blow up of the thing based on that, in fact, when Tether's case, like possibly up to 70 something percent based on that, sort of based on fractional reserve of that, seems like a pretty big recipe for disaster for something to cling to. Now, it does seem like when you're talking about stable coins, the only reason that there is such a thing, from my experience, maybe I'm missing something, right? But in my experience, the only reason they exist is because someone created them so you could get in and out of fiat currencies without the whole AML, KYC, and exchange fees. So literally the only reason they exist is because they represent fiat currency without being fiat currency. And I think that if there was a regulatory change to where it was either easier to trade in and out of cryptocurrencies, or where stable coins were considered to be either fiat currency or otherwise counterfeit fiat currency, then I think that the value proposition would drop to zero pretty much overnight.
Yeah.
I mean, it's a tough topic. I mean, I think there's there are some stable coins that are fiat. I mean, they're like nothing backed by fiat, and they're very strange coins. But I mean, that's kind of like Vimeo and PayPal and that kind of stuff. And then like JP Morgan coin, Facebook coin, and these various technologies, and also all of the USD backed centralized coins like Tether. Like, this is fiat, like you said, because we can't prove the reserves. But there's other coins that are decentralized and try to harness some of the security of, for example, the Ethereum blockchain. I mean, like MakerDAO, MakerDAO, and I mean, I think it's an interesting way that they set that up, and an interesting solution. And I think it is really useful on exchanges. So that was like, I think one of the original demands for Tether was so that people could basically keep fiat online that wasn't kind of, exposed to risk, but at the same time they didn't have to cash it out and pay taxes on it, that kind of stuff. So I think that was one of the main gains. But I think there's also other gains. Like for example, in Switzerland, I live in Liechtenstein, and in Switzerland, there's different talks about a Swiss cryptocurrency issued by the Central Bank of Switzerland. And one of the sales pitches is that people in Venezuela would probably love to hold on to Swiss francs, but their banks won't let them. So that would be another, an option for people around the world to kind of, it would make the central banks compete with each other on a level we've never seen before.
Yeah, I think the jury's still out. There hasn't been a long enough track record. And, I've only really been following and seeing the stories about the Tether. And I agree with you. I think when the bear market hit and people went down, people were getting out of Bitcoin and going into USD Tether as kind of a safe place because they didn't want to get the fiat out of the exchanges, and they wanted to keep on there in case the market turns around, they can put their money back in. But I don't think that's enough of a justification. And it's actually proven to be quite dangerous because I think in the case of Tether, they were linked to 2 bank accounts, which they only have a certain protection for a certain amount of dollar amount, and they were way overextended, which is a very centralized solution. So for me, it's kind of like for the individual person, I can understand why people would want to use it for exchange reasons and why it makes sense for platforms to do it. But the individual person, I'm just not seeing it personally. But this is an interesting phase that we're in because I don't want to say it's a fad, but it's a hot topic at the moment. People are talking about stable coins. There's lots of new projects coming online. And that kind of brings me to my next point that I wanted to talk to you about, because it's not just stable coins. It's now Main Street starting to come over as well. So I was wondering if you could give me your thoughts on JP Morgan coin and also Facebook coin, because I think they're I don't want to say, they are centralized solutions, but I think they're probably 2 of the biggest ones from Main Street that are making because JP Morgan coin isn't a cryptocurrency, is it? Because it's just for internal use. That's my understanding, right? But Facebook coin, for me, I don't know. For me, alarm bells are going off. But when you hear Facebook coin, do you see opportunity? What do you think?
Oh, I mean, I wish I knew more about those coins, but for me, they are kind of like centralized stable coins that are pegged by fiat. I mean, so for me, it's not. I think that those are better than XRP, but XRP is a low level, a low threshold for me. So, but I don't think there are opportunities. I mean, I don't want to use. I mean, after all the cleansing of accounts on Facebook and stuff like that, I mean, I don't want to use Facebook coin. I mean, of course they're not going to let me do what I want to do with my money. They're going to tell me, they're going to dictate to me what I can do with my money. So no thanks.
Yeah, I feel the same way. It's just the data privacy stuff. I mean, when you think about central banks, they're still region based. When you think about Facebook itself and Google, think about the access of the information they've got, right? And how they can shut things down, they can filter things. We've already seen certain censorship on all sides of the political spectrum. But, there's been some very popular YouTubers that had their Facebook accounts shut down. And these were actually their personal profile pages. And they lost all their photos and everything that came with it. And then they realized in the small print that when you upload those photos, they're not actually yours. Once you upload, that's Facebook's content. Once that's gone, that's gone. Years and years of photos just gone. And you have to remember, Facebook owns, I think, WhatsApp as well now. Instagram. It's a really scary thought for me. So I can't understand why people would be pro this situation. But then again, they've got massive ad revenue. They got their fingers in a lot of pies. And I'm just worried that, speculators will see that because of the power of the network and the infrastructure that they've got. To me, it screams centralization, but to other people, they might just see dollar signs. And so then it comes down to educational perspective, and we're going to make sure that people are actually asking the right questions. Otherwise, you get XRP army pushing things right and people jumping in to certain things without actually looking at the fundamentals.
I mean, I completely agree. I mean, I have to say that, I started out, I became interested in Bitcoin and in Dash and in a few other cryptocurrencies early on because of my ethical outlook, like my ethical principles and my morals. But then when I got the job at the hedge fund, I have to say I did change a little bit because I do see now that if I can earn a higher return for my investors are well off. And most of our investors at Incrementum actually hold the same ethical principles as I do. And that's why they invest with us instead of with, a big bank. So I'm like happy to really earn for my investors. And it is the case, like, for example, like with MakerDAO, I'm like, yeah, okay, in the long run, is that thing plausible? Okay, maybe not. But in the short run, can I make some money for my investors? And I do see, and I think that I actually question it a lot. Like, should I be making this investment or not? Whereas other hedge fund managers probably will just be seeing the dollar signs.
Well, that's interesting. So we've already established that you speak in communication with many large investors, serious money, that you talk to in your line of work. So what I would like to know is, are these large investors ready to enter the market, or are they still sitting on the fence watching?
It really depends, I have to say. For example, I live in a super traditional, conservative, like risk-averse region of the world. Like the German-speaking countries are some of the most risk-averse countries in the world. They're known for preserving wealth, but not for taking heavy risk on. And this is, sorry, go ahead. Were you going to say something?
No, I just was laughed because we work with plenty of people from that region, and that sums them up very much. They're the safe people, and like we're the wild cards.
They think a lot. They think through the like long-term consequences, and there's multiple reasons for that, right? It's like, I don't want to go into it, but like, for example, if you fail here in this region, it's considered basically a sin. So failing in business is considered shameful in your community. And in the US, it's like, no, you can go bankrupt 3 times and everybody's like, hey, good luck next time, bud. Like they have a totally different attitude towards risk and return. But so I have to say that when we pitch cryptocurrencies in our region, there's basically 2 groups. There's the ones that are like, okay, that's interesting. We know we want to allocate 1% in the next 2 years, but right now, it's just too early. And then we're like, okay, we understand. And then there's the other class of investors that are interested, but I have to say it's because they already have personally invested in cryptocurrencies themselves, and now they're running an institution that has some money to allocate, and they're willing to allocate it to a cryptocurrency product. But I rarely find like a super traditional asset manager in this space. Like, basically, who are we pitching it to? It's pension funds, insurance companies, big banks that are managing their clients' assets, and family offices, and high net worth individuals. And the first thing is, high net worth individuals are the most likely to go for it. They're the easiest to convince. And the hardest to convince, of course, are pension funds. They're like totally not ready right now in this region. Where I have seen more interest, like strangely enough, I'm not sure why. I think it's because we focus a lot on gold. We're trying to tell people that cryptocurrencies is digital gold. So we get a lot of interest from the Middle East because they're very interested in gold, and digital gold. I think if you pitch it like this, then they're very interested.
Now, that's very interesting. How are those areas of the world for retail use as a payment system? Do they care at all for that? Or is it just, no. We'll take our paper to transact in. We just want the piles of the shiny stuff at home because that has a real value.
Ooh, good question. You mean in the Middle East?
Yes.
Ooh, to be honest, I really don't know what's on the ground there, as far as cryptocurrency goes, like actual use. That's a great question.
Okay, I noticed on the crypto research reports, at the end there was some technical analysis. But while we're talking about investors, large investors, net worth and whatnot, I'm sure you get asked all the time, as we see in these crypto publications on an almost daily basis now, talking about the bear market, the bull market. In your opinion, are we at the start of a new bull run?
I mean, I have to say yes, right? I mean, also, I didn't follow Dash's move today, but I followed Bitcoin's move today. It was freaking phenomenal day for Bitcoin. You know, I mean, what we went up like $300 today in Bitcoin. I mean, I don't know, but this is, for me, like the way, so if you look at like traditional stock markets, at least in the US, now this might be different in the UK, but in the US, the stock market is considered to be entering a new bull market if the index is up 20%. So cryptocurrencies is of course more volatile. Like if you were to compare cryptocurrency beta to stock market beta, is of course it's more volatile, but I think that if you want to arbitrarily define when a new bull and bear market starts, at Incrementum we define it just for our purposes as 30% increase in price. And we're now above an 80% increase in price for Bitcoin since the low in December at 3,125. So for our purposes, by definition, we've entered a new bull market.
Interesting.
Interesting.
Yeah.
We do have a question.
I was going to talk about the Golden Cross, but like I don't know.
Talk about that first, and then we'll get to the FUD.
Okay, yeah, because it seemed like most of the cryptocurrency publications, the ones that were saying, you know, we're in a bull run, of course, it's in their best interest to hype the market, right? Because it's good for their readership, right? But the Golden Cross, which is the 50-day moving average crossing over the 200 moving day average, and you know, going up is a very bullish, like long-term move, right? But if it's going down, it's like the death cross. That's like very bad news. It's like sell everything, you know, sell the house, sell the kids. But you know, it's crossed over and it's gone up. So I think it's only done that a few times in Bitcoin's history, and that you know, the last one was a massive, you know, obviously downturn in the market, and people were saying that, you know, it's the longest bear market in Bitcoin's history, etc., etc. So now we've gone past this like Golden Cross. I think it's in the last month or so. Everyone's getting super excited, and tying that into as well is kind of John McAfee with saying that, you know, if Bitcoin doesn't get to $1 million, he'll chop off his wiener or something and eat it, or something crazy like that. But he's basing
something very John McAfee style.
But his reasoning for that is because there's the Bitcoin halving next year, which I think happens in May 2020, around then. But that's still some way off, right? But that's how he's making that sort of calculation, because of that reduction. And he thinks, you know, when in some ways it does make sense to a certain degree. Not the $1 million ratio, but of course, you know, if there's less to go around to the miners and people selling them on exchanges, there's less to go around, right? So it does make sense that there'll be, but like we'll have to see how that happens. Anyway, I just thought it was, as we're talking about the bull market, I thought we had to mention the Golden Cross, because that seems to be what most people were talking about. Joel,
yeah, it's like a new Indiana Jones movie, Indiana Jones and the Golden Cross. You know, when everything will make everyone's wealth immortal.
Yeah. So Demelza, if I understand correct, last time you said that you don't get too involved with the technical analysis stuff. You leave that to other people, but you obviously you do read up and you do follow up on it. And so what kind of technical analysis is in the April edition? Is it focusing just on Bitcoin, or is it just overall market?
It's only focused on Bitcoin. Sorry guys, only focused on Bitcoin, but I think that he's got, actually, I don't really know that much about technical analysis, but that's why we have Florian write the articles there, because he's kind of in the German-speaking countries. He's considered like a technical analyst, like a good one, you know, like an expert technical analyst. So I think he has some nice work in there. And he wrote an article for us a year ago when he wrote "The Crypto Winter Will Continue." So we have published both ways. Now we're publishing the Crypto Spring is beginning. But one thing that I think he noticed in his work was that the past two halvings, got priced into the market approximately 430 days prior to the halving occurring. And it's hard to see when, I mean, not fully priced in, but the price began to turn from the trough, the lowest point of the valley, upwards around 430 days prior to the halving. So it could be that investors are already beginning to front run each other, right? Because it's like, if we know the price is going to go up tomorrow, then we buy today. And that just keeps happening back and forth until we get to a period where, you know, we are right now, which is basically where investors are like, okay, Bitcoin's probably going to be around in a year from now, and it's going to reduce its scarcity. So therefore, let's go ahead and buy in now.
Interesting. It always comes back to mining, doesn't it? To a certain degree, right? With proof of work coins. Now, I googled you earlier, and I saw that you did a podcast in March with a lady called Anita. I don't know if that's ringing any bells. And I just saw a quick clip of it, and you mentioned something, and I wasn't familiar with this. So I appreciate this was back in March, but I think this will be interesting for our audience. So on this other podcast, I heard you mention that European electricity providers were looking into investing and mining cryptocurrencies. Does that ring any bells? I did hear that correct, right?
It's true. I wouldn't say they're looking into it. I know one electricity provider that is one of the largest in Germany that has been actively mining for over 2 years now. And it's one of the largest electricity providers in Germany. So I don't want to say which one it is because it's like confidential, but now what they're doing is they're transitioning from only mining and they're transitioning into investing. Because these electricity companies, they manage, I mean, they have local monopolies, you know, I mean, wherever they have local monopolies, and they manage billions of dollars, at least in Germany. They manage billions of dollars, and they have to choose what to invest in. So they mergers and acquisitions, they buy completely different product lines, they buy stuff, they buy bonds. One company has invested heavily in mining, only ASIC mining. So it's interesting that you mentioned Dash is ASIC. I wasn't up to date on that, but and now they're going to go into investing. So
wow, I mean, because I've always heard it's no mystery. There's always been like rumblings in China, you know, and also Russia as well. We hear these stories of people like warming up their houses, like mining and stuff. But like, yeah, I heard. Well, I think I saw on some videos from Box Mining. He was talking about China, and he was talking about you know, the centralization there and the government being involved, and then electric grids and electricity providers are in it, and obviously because they have to get licenses from the government and all this sorts of stuff. I can't verify all this stuff. It's all hearsay, but you know, it kind of makes sense if you're creating electricity, especially if it's nuclear, right? And you got some on the side. It does make sense, right? And I guess if you're China, it makes sense to kind of hedge your bets because you don't know what the future holds, especially if you're holding all this US debt, right, in dollars. There's going to be like this debt tsunami. So it's just their way of protecting themselves, right? In some ways.
Great point.
Well, and speaking of House of Cards, we got a question in the live chat. Does it bother you that Bitcoin is $350 higher on Bitfinex than any other major exchange?
Ooh, does it bother me?
Yeah, and of course, you know the connection with that, right?
Huh?
You know the connection, like why it would be higher.
Well, I mean, I don't. Well, I mean, only because of Tether. I mean, because Tether, we're using Tether to buy up Bitcoin, and the Tether's not backed by anything. I mean, that could be one reason. I mean, I'm not really sure though, but like, luckily on our side, we don't have to really deal with making sure that we get the best I mean, we don't have to trade around because our custodian bank deals with all the arbitrage situations. So we just lock in a price with them, and then they handle the actual trading execution at the bank side. So we don't actually have to deal with that. But personally, I mean, I would think that the only reason But I don't think Bitfinex would do that right now because aren't they currently, like that news just came out like a week ago about like one of the US regulators actually coming after them finally, didn't it?
Yes. I believe that they have been under investigation. I heard some rumors and apologies for not being the most up on the issue, but it was either today or yesterday there was some news that there have been arrests made as well. So I don't know.
It's just that they're still allowing like unbacked tethers. I mean, while the investigation is going on, they're like, let me just get like 50 million more out of this.
Yeah, it's a little shady.
I've got a question for you. So you got into Bitcoin in 2013, if I remember correctly. Yep. Yes. And you're still a believer in Bitcoin. It's got the biggest network effect, right? So of course. But there's been lots of ups and downs, which you would have witnessed. SegWit 2x, the splits, then the splits again, and But like, I want to know where your head's at today, like how you feel about Bitcoin. And the one thing that people holding Bitcoin now, they see as their savior is the Lightning Network. And I want to know what your opinion is, because I know you've given your opinion on the Lightning Network before. So the Lightning Network, is it a godsend or is it like the spawn of Satan? Like, what are your thoughts?
Because I know or is it a more nuanced opinion than either of those?
Yeah, no, because I know you've tried to use Lightning Network. So like, what's your experience been, and what do you think? Is it like the savior of Bitcoin?
Well, I don't think so, no. I mean, I'm not a big fan of Lightning Network. I think that, so here's my issue, and I confirmed this actually with James Chiang from the Lib Bitcoin repository on GitHub. Basically, here's the problem with the Lightning Network from my understanding. Okay, if we open up a channel, so right now it's super cheap. It's like whatever the transaction cost of sending a Bitcoin transaction is, right? So like, let's say it's like 15 cents. But then let's say that we go to close that channel in 10 years from now, or say that I need to open up a new channel in 10 years from now. Well, if transaction fees on the network, on the main chain, are $5,000 per transaction, I mean, we've already seen them reach 50, right? And like, nobody in the world has even adopted Bitcoin yet. So like, in 10 years from now, if we get up to $5,000 per transaction fee, then we have to pay that to open the network or close a network. So that means that the total volume of all the transactions within that channel have to be greater than the transaction fees required to maintain that channel, to open and close it, in order for that to even make economic sense. So I don't think that Bitcoin is ever going to be used for micropayments. I mean, it's like a El Dorado, it's a mirage, it's a Fata Morgana in German. It's just not going to happen. So, and for me, I think what's important there, like in the long term, like the end game, what's interesting is how are we going to make sure that miners are incentivized to maintain the network in the face, losing the Coinbase reward. So I think that over time, Bitcoin needs to get more adoption. We need Lightning and we need sidechains. I think that it's not going to be used for payments. What it's going to do is it's going to increase the overall capacity of the network so that people can use Lightning like Swift channel, like Swift network, but still it's going to require transacting amounts of money in order to make for using Lightning Network to make sense, and then those fees will go back to the miners that validate the network. So I think that in the long run, we need to get more use of the network in order for it to make sense, and using Lightning will allow more use, but I don't think it's ever going to be to the point where we can use this to buy coffee.
I had my first Lightning Network experience in terms of payment last Friday in the after party after the podcast. Can I tell you about my experience? Because I think it validates perfectly what you just said. So this is not the problem of the provider. I just want to make that clear. But it was a service called Pay with Moon, and we saw there was like a CoinDesk article on them, and they're like a browser extension, and it uses the Lightning Network, so you can purchase things from like Amazon. So in the after party, there was a bunch of us together, and we wanted to trial it out. And to be able to use the service at the moment, you have to link up your Coinbase account. So you have to have that to be a user, right? So we found like some cheap item on Amazon. It was like a microphone cover, right? So really cheap, but we thought, okay, let's try this out. Let's see what it's like. And one person in the after party actually had a Coinbase account, so it worked out really well. So he synced up his Coinbase account, goes to make a purchase. So everything looks fine. But then it says in order to do the payment, it has to open up a payment channel on the Lightning Network, and it needed to do 6 confirmations. Now, like, we're all new to this, and we're thinking, oh, okay, right, it's brand new. But to open up that payment channel and for those 6 confirmations to go through took forever. In fact, after I think waiting for 20 minutes to half an hour, we were still on the first one. And there was a chap called Spencer in the after party, and he was hungry because these after parties, they can go on for ages. And he went to a service called Bit Refill, right, where you can purchase gift cards with cryptocurrency. And he bought a Domino's gift card with Dash, with Instant Send, after the second Lightning Network confirmation, right, had gone through. So he got this Domino's code. He then ordered Domino's takeaway home delivery. And by that time the Domino's had arrived, he'd finished eating it. And we was all laughing because it was live on the after party. And he entered the boxes. And it'd been delivered and he'd finished eating by the 4th confirmation. It took nearly 2 hours for 6 Lightning Network confirmations to open that payment channel. And people were saying that this is a solution for merchants. I can understand once that channel's open, but if you're like a new person buying, it's just not feasible. I think people that are pushing the Lightning Network, I can understand the media frenzy of the, passing over the torch and everything else, but people actually trying to use it to buy stuff, mate, it's a different experience. So they've got a lot of work to do, and I can't see how they're going to fix this.
Yeah, pay with Moon, more like pay with Hopium. Am I right?
Well, I mean, like I said, it's not pay with Moon's fault because they're just using.
Of course, they're doing
Network.
Their best.
Yeah, so they're just, and I believe they will be accepting Bitcoin Cash and other cryptocurrencies in the future in their roadmap. But yeah, that was my first experience with the Lightning Network, and there's not a lot of great information on it. Everyone's got an opinion, but it's kind of a bit like XRP and Ripple. Sorry to come back, and I know it sounds like we're always bagging on them, but it's just like when you see. That's
okay. We can have a podcast dedicated to that.
When you see like crypto Twitter stuff, it seems some of the people pushing things don't understand the fundamentals and how things work. And sometimes I don't feel comfortable if I don't know how it works, just like stablecoins. Like I'm not in a position. I can't speak with authority on the subject. I can give my thoughts and feelings from my current position, but I can't be like concrete and rule things out. But if you're basing it on personal experience of using a service, and when we're talking about merchant adoption, how things work, like that's real life experience, and it's just not working. And yeah, I think a lot of people are just sitting on their Bitcoin and they're just not using it. And if it's ever going to become a currency, then we talk about the chicken and the egg problem of users, but merchants, and the merchants don't want to accept it unless there's users. We're in this really crazy thing because I believe in cryptocurrency and I want people to start using it. It is money to me, right? It's more money than this dinosaur money, right? But at the same time, it's kind of like, how are we going to get there? And right now, I think a lot of people aren't prepared to spend their cryptocurrency. And I can understand that, because if you do have fiat, or if you're in a job and you're earning fiat, I'd rather spend that dinosaur money first before my cryptocurrency. So I still feel like, although I'm passionate about merchant adoption, and we run the merchant directory, which is without a doubt the best in the cryptocurrency in terms of what's available when you compare it to other cryptocurrency projects. But at that same time, I recognize that it's probably going to take another 5 years or longer really for this to kick off. How do you feel? Do you disagree, or what's your experience being with merchant adoption? Because you must look at projects, and because it's all about utility, right? You can look at the features and functionality and the tech specs of coins and get all excited, but are people actually using it? It's the utility that has the value. And most of the coins in the top 10, or tokens, I should say, aren't really doing anything. And I just want to get past that finish line. I believe in the free market. Competition inspires innovation. But how can we say this one's the best money when no one's actually spending and using it? I don't know. I just find it a little frustrating. What do you think?
Well, I think you make some great points there. And that's one big reason I really like Dash. I mean, I've been a big Dash fan, and I really just think that Dash combines the best of both worlds for me personally. But I mean, basically, I wrote an article for a small magazine in Zurich in 2015 called the Hayek, no, it was 2015 called the Hayek Club, this magazine, I can't remember, Hayek Club magazine. And basically what I argued in there was that I personally don't think that we need a store of value and medium of exchange in the same asset. Now, I know that's very controversial, but if you look at history, so Karl Menger in Principles of Economics in 1871 and Hayek wrote about different societies, and also another big economist, Antal Fekete, who's a Hungarian student of the Austrian school, and a few other people, basically wrote that throughout society there were times where people used a cow as a medium of exchange, or no, they used a cow as whatever, the store of value, and they used the salt as the medium of exchange, or vice versa, or whatever. They used different assets for these different functions. And I think that for Bitcoin, like, and also for gold, like gold, nobody uses that as money. I think nobody uses it as a medium of exchange because it's too costly to transact with, in my opinion. But people still store it as a store of value, and it has value. However, I think, for example, Bitcoin, even though Bitcoin, I don't think will ever be used as money, I think its use case is being a non-confiscatable store of value. Now, that could be argued that Dash has an even better proposition as a non-confiscatable store of value because
more scarce as well.
Yeah, we'll get to that in a second.
Sorry.
Because it's fungible, right? I mean, it's more fungible, right? I mean, it's I think Bitcoin's going to have some issues in the future with the fungibility stuff. So, I mean, I think that if we're going to be a non-confiscatable store of value, we need to have basically fungible units. But I think that what's interesting about Dash and some other projects, I mean, is I want to see medium of exchange cryptocurrency, but I think that we need a little bit of a hybrid model where we trust master nodes a little bit. I mean, I don't want to say it like that, but I think that we need to get past the scalability issue, and the only way to do that is to slightly trust some cohort of people that can quickly pass through transactions. So I mean, for me, I mean, I'm not an expert on the technology side, but for me, I feel very comfortable with the hybrid model that allows transactions to scale. And I think that's really the way we're going to achieve medium of exchange.
Well, I'm really impressed that you've come to that conclusion, because so many people overlook. They're seeing people running these networks with Raspberry Pis and stuff, but you've already acknowledged the advantages of Dash and them pioneering the masternode network, because we've comparing it to people using Raspberry Pis at home, right? Compared to masternodes, VPS, high bandwidth frequency, high processing, high RAM, hard drive speed. And that's how we can do things so much faster. And people can't actually grasp that concept because they get, they get too lost in the fantasy of the maybe I don't know. It gets all dressed up, right? And it gets to the marketing and the hype and the speculation side. But when it actually comes to infrastructure and everything else, there's just so much advantages with just running masternodes within itself. And I truly believe, we're talking about sound money. So yeah, you're right, fungibility and intrinsic value, but also like scarcity. And for all the reasons you were talking about Bitcoin, I was just like, yes, exactly. And I felt the same way. I feel exactly the same way about Dash. And for the reasons why I like Bitcoin, I like Dash even more because it's even more scarce. It's got more use. So it's not just a medium of store of value. It's a medium of exchange and a unit of account as well, pretty much, right? Because it is being used in Venezuela and elsewhere. And to be honest, if your cryptocurrency project can't make it in a place like Venezuela, where
where literally everything doesn't work.
Central banking has failed, then you need to go back to the drawing board. No offense, but like if you can't make it work there, then it's game over. Because if your solution's not better than the solution you're trying to replace, what are you doing? What are you doing? What? And that's why I come back to like the top 10 cryptocurrencies. I'm just saying, like, where's the utility? It's just all speculation. And I think people putting this money in it clearly they must not understand what's going on.
And
so
that's the thing.
Is it smart money or dumb money? I don't know.
Well, there's trade-offs with everything, right? And sometimes there's some certain givens, and people just think. So, for example, the value proposition of Bitcoin first was peer-to-peer electronic cash, and it turned out into a great stable store of value as well as a superior payment method, although rough. And then at some point, the payment part kind of became less efficient unless you're like, well, it's cheap to move $100 million, but for most other things, it's not. And then it kind of sat on top of that, stable store of value kind of thing. Then you have other projects like Dash coming along. And the entire reason it has lost its ability for payments is under the argument that if we make this able to be used for payments by everyone, we will lose part of its value by making it less decentralized. That is the argument. Now, the problem is it ended up shifting the responsibility to something else. So, for example, what happens if you have only Bitcoin? Okay, well, what are you going to do with it? Okay, you got to spend it. Well, pretty much no place takes it because it doesn't work. So now you have to trust an institution to convert it into something that you can spend. And then, okay, well, or you'll put it, load your Bitcoin backed debit card, get your rewards points going, swipey. And at some point, you're stuffed to but you run your little node in your house and you're thinking, because I validate part of this, doesn't matter that just 4 large mining pools control the majority of the hash.
Did we lose him?
Oh no, we lost. I thought I was worried I lost both of you then. Oh no, Joel. Oh no. But like, okay, we'll wait for Joel to come back. But like, for me personally, a lot of it, the store of value argument, it just feels like musical chairs. It doesn't feel like a valid argument to me, because yes, you can say the only thing that gives money value is people's confidence in it, right? Because if enough people have confidence, it has value. I understand that. But then you could easily argue that for any of the top 10 cryptocurrencies, and then it becomes a game of musical chairs. Well, so-and-so's got this much money in it, so it comes up, and then it's not based on what it can and it can't do. I mean, I was in precious metals before cryptocurrency, but I can't spend it online. I can't, it's not suitable for the digital age, right?
Yeah.
If I'm international business and I want to do some business in China, precious metals isn't suitable, right, for me. But I do understand that it's perfect for me as a tool to preserve my wealth, right? For wealth preservation, absolutely. Because of its intrinsic value, scarcity, all the laws of money, it makes perfect sense. It is sound money. But yeah, this whole store of value argument that Bitcoin gives, I get right now that it has the biggest network effect. But in terms of sound money, when you go down the list, it just doesn't. And you put it directly line to line with Dash. I don't see in terms of what the use cases and the utility that it offers as well. In addition, for me, it's just a no-brainer. And where Bitcoin initially was like, they say like, the gateway drug, you say like marijuana leads to, heroin and everything else. Because traditionally, in the beginning, you had to go through Bitcoin to buy other assets. Now we're getting trading pairs of things. Dash is about to get a trading pair with gold, for example. We were talking about stablecoins earlier. So I do think we're in this transitional phase. I think some people, obviously get into Bitcoin first because it's the most well-known name out there. But I think it's when they go to try and use it, the speed, the fees, then people start to understand, and they're like, oh, is it like this for everything else? And they go through this whole journey of discovery. So I can't see this lasting for a long time. And if they keep dressing up the Lightning Network and it doesn't get any better than from what it is right now, then I think we're heading for disaster. And like there has to be, the flipping in was being used quite a lot with Ethereum, But there has to be some stage where people just sound like, well, this is really great. We can understand why we're doing it, but we can't get to where we want to be with this still being here. So something's going to have to give, which means one of these big boys is going to have to come down. It's going to cause a horrible situation, but there's going to have to be some switcheroo somewhere, because this can't be what we want it to be. And I don't know when that's going to happen, but there has to be something. But Demelza, the dashing in is a happening.
The dashing in, the flipping of Dash in Bitcoin.
Well, one day a boy can dream.
Maybe.
Well, and that's the thing that people don't realize, is that because of this brave new world of technology, first off, it's not just like the gold from the earth that you just, if something there's no gold network. If you mine some gold, you have some gold, it just, you have it forever. And even if the mining infrastructure behind behind gold breaks down, you still have this part, even though the gold economy and the price might be affected, whatever. But if you have some Bitcoin, if then someone spends a lot of it or sends a lot of transactions the next day, you can't move it without spending a fortune. At some point, your unconfiscatable stash of Bitcoin, of digital gold, becomes entirely unmovable and therefore confiscated if the fees go high enough. And then all of a sudden, the store of value unconfiscatable thing just doesn't matter. Or what happens if there's an attack on the network? And that's the other thing, is Bitcoin right now is at the top of the decentralized security pyramid. It's like the most secure, has the most hash power going through it, so much investment. It's relatively diversified in terms of, for example, nearly all the top most secure coins also have like 3 or 4 major pools constituting like 51% or whatever. So it's like, that's kind of the top level we're at these days. But what happens if someone figures out a way to redirect a whole bunch of hash power? So for example, say a bunch of Bitcoin market share goes to a Bitcoin Cash or Bitcoin SV miner using the same algorithm. And then what happens if Bitcoin Cash and SV get high enough in value to where they can just redirect some of the hash power and attack Bitcoin? And then all of a sudden, because they know that their bags will go up. If that Bitcoin goes down, their Bitcoins will go up. And then the security of like, this is stable. Oh, wait, now they're using it to rewrite transactions and destroy the whole network. Now you literally cannot use this. Your wealth is gone because of it's a little different from gold in that way, which is why I think that the technology has to be evolutionary. So one thing that's very exciting about Dash is chain locks, as I'm sure we've discussed before, where they uses the master network to assist in securing the network, to basically proof against 51% attacks. And will be released it's on testnet now. It'll be out in the actual live code relatively soon. And that may make Dash the most secure network, even above Bitcoin, not from having more hash power, but the fact that you now need at least half the hash power and over half the master nodes, which at market rate right now, that's like, what is it? 600 million or more USD and of course, if you try to start buying that up, can you imagine where the price would go? So it's going to be interesting to see outdo the store value. Also, in order to make the Lightning Network work, there's been talk of inflating Bitcoin permanently, having to decrease it to getting rid of the max 21 million cap in order to keep on funding miners because they aren't getting fees. Then all of a sudden you have 18, 19 million hard cap Dash versus, infinite supply Bitcoin. Then you have the security issue. And then you have also, you can instantly send it to anywhere securely. It's secure. Thanks to instant send, it'll be secure instantly, more secure than a Bitcoin transaction might be in its lifetime. And now we start to have all of that kind of, and then there's just network effect as the advantage, which it's a very dominant advantage. You cannot ignore that at this point. It's extremely dominant. What happens as that starts eating away? Then you have like the value proposition. Well, Bitcoin better store value. Dash has all these features which lift it above its network effect, but it's still down here. And then all of a sudden it starts to tip. And then at what point do you have to pay attention to actual technological advancements and sound economics of the model? And Yeah, it's going to be interesting to see. I don't see how Bitcoin is going to be the primary store of value forever. I don't know what you think about that. It might be. I'm pretty sure it's going to be there for a while, like maybe 5 more years, possibly longer. We'll see, but I don't know if it's going to be forever. What do you think? Sorry for the epic rant.
Well, I think that, if I mean, you make some good points. I mean, I think that, one thinker that really inspired me in my life was Hayek. And Hayek, he won the Nobel Prize for his paper on the use of knowledge in society. And knowledge is decentralized. You have a lot of knowledge, and I have some knowledge, and I have a friend that has 10 master nodes, and he has some knowledge, and then everybody's got some different knowledge around. And for me, as an asset manager, the way I took Hayek's message was that I need to diversify. I mean, I know that it's against Warren Buffett's strategy and all that kind of thing of, only investing in what you really know. But here, I mean, this is a pretty big debate. Is it going to be gold in the future? Will it be gold-backed crypto? Will it be Bitcoin? Will it be Dash? I mean, there's so many different variables to consider. And the only way I can kind of hedge my limited knowledge is by having, picking out a couple ideas that I think really are great ideas and then investing in them. So, I mean, personally, that's kind of my approach, because I try to, at the end of the day, say, okay, I might not know exactly who's going to win in the end. And if there's going to be one winner, there might be a cohort, it might be, multiple coins in gold combination. So, we'll just have to see.
Yeah, well, that's exactly, I think, an important point when you say diversification is something you're going to have to do. And at the same time, it kind of conflicts with the Warren Buffett, invest in what you know. However, there's a solution. There's a third way. No more. Start looking around into other things. And that's the thing, is people start going deep with Bitcoin usually in cryptocurrency because it's the big one and everything. It's the first one. And then at some point, you got to go deep into something else too. So just find something and that's worth that, and then now you have like equal knowledge. And so, for example, I used to live completely off of Bitcoin back in the day, and it was like I knew all about everything. And then I started learning about other coins, and then by the time I got into Dash, I had like a learning curve of like, oh, this is basically like Bitcoin, but a few little differences. I kind of knew the lines, but then I started to find things out over time. Oh, this does it differently. I didn't know that the mining difficulty adjusts every block instead of like this long thing. Oh, I didn't know this happens. I didn't know that algorithm this. I didn't know this. I didn't know the distribution was like that. So much stuff I didn't know. And now I'm kind of deeper in Dash than Bitcoin. But then I, look into some other coins, see how they work. And it's eventually you can have decent knowledge in a few different things. And the good thing about cryptocurrency is once you start learning about them, you start to see that first off, once you learn about the technology is semi-universal. There's a lot of differences, especially if you go to stuff like, say, Ethereum or like crypto note-based coins or, heaven forbid, IOTA. Then you start to see there's some difference, but like the basics are kind of the same. But also, you cannot escape economics. And so many coins try to say, oh, we just do it. If it's all free, doesn't cost anything to do stuff. And you're like, well, that's not how the universe works. I have to find the cost somewhere. Oh, there's where it is. And then you find it and the whole thing comes down. So if you have if you have a basic knowledge of the technology that gets stronger all the time, and then you have a very solid, timeless knowledge of economics, I think you're pretty much set.
Yeah, and I think you must look at projects in terms of many different areas. And I think we touched on this briefly on the previous podcast in terms of you was mentioned about following the Twitter, looking at the tags and stuff. And in the past that worked quite well, not so much right now. But in general, the project itself, the development team, the quality of the code, like I've put serious money in this. And like I said, I was in Bitcoin first. I didn't move over to Dash all 100% straight away. It was gradual over time because I realized thinking, I've actually got serious money now. I've got to take this seriously. Like, if I've got money in this project, I need it to be robust. I need to trust it. And it became more apparent that a lot of these projects, you know, when it comes to their code and everything else, even the GitHub, the developers don't want to, as you found when you research projects. And with Dash, they had a very open, transparent way of, in fact, they're one of the only projects I know that want Dash to be so secure and so robust that we have a bug bounty program, which has, there's over 60,000 independent security experts on that platform. And they're looking at Dash and they're incentivized to find a problem and try and break it. And we've had this partnership for well over a year now, probably close to 2 years. And, you know, there's been a very few bounties and stuff claimed, but this is how, but we want it to be robust. And other projects are scared of doing things like this. I'm actually encouraged. This is a very, very good sign. No one else is doing this. And like Joe was saying, Bitcoin had first mover advantage. No one's denying that. But Dash
still has it.
And Dash has first mover advantage in being the first self-funding, self-governing DAO. So what does that mean? Well, I'm sure asset managers and fund managers, if they're looking at cryptocurrency projects and they're saying, well, if this is going to be a bull run, and if we do get to the highs of where Bitcoin was before, obviously the other projects follow suit. And Dash at its previous highs was $1,500. At that stage, our treasury, monthly treasury, had millions, right? We're not dependent on donations or third parties. When we was at our highs, I was getting calls from people from Hollywood wanting to do all kinds of stuff. You can't do this with other projects. This is why I was saying the dashing is happening, because the penny hasn't dropped for most people because they still don't understand masternodes and the network itself. They're still in Raspberry Pi land, right? But when the money is there and there's projects and people there want to actually want to build and do things, Dash has that vehicle, that mechanism to do it internally, and has the governance. It's a community-led project. That's the real network effect, right? We're not run by personalities or leaders. We're decentralized. And as speaking as a trust protector myself, we're not even centralized in the sense of Dash core group, right? Because the network can replace them. If the network's unhappy, they come to trust protectors like myself and put in that vote, and we put that forward. And even if there was an event in a chain split, which there shouldn't, because we've got decentralized governance, there's things in place that we can switch gears and do what the network wants us to do. You can't, no other project I'm aware of has that set up. So when you're talking about longevity, shelf life, future-proof, security, this is real money. And if you're talking about putting real serious money in these projects, you've got to be clued up and smart. And it took me a long time to figure this out and get to this position, because I was a Bitcoin evangelist, and I'll be in the pub and I'll be talking to my friends, but then you get that reality check when your friends say, well, I'm married. Can I have a joint account with my bank, with my wife? Can I pay, direct debit with it? Well, if I can't spend it, can't use it, what's the point? And it's just these real life situations. And then you just realize, yeah, you're right. This isn't feasible. And, it's a technology. It's a disruptive technology. The first mobile phone was a Motorola in 1978. It came to market in the early 80s. Does that mean Motorola is still the #1 mobile phone today? No, of course not. Research, development, everything that comes with it. Now we've got iPhones. They brought the App Store. Now we've got Android. Windows didn't do so good. BlackBerry used to rule the enterprise world, right? But then you had to have BlackBerry, servers and everything else for enterprises. So, I think people are really short-sighted sometimes. But I think because where we're in that transitional phase, I was saying, I generally think it's going to take probably another 2 to 5 years till we start seeing some really good, strong merchant adoption. But it's when people actually want to start spending it, they're going to be like, well, yeah, we need the speed, the price, everything else. And then people are going to be looking for the security with that as well. And the distinct advantages of the network, the decentralized governance, and the fact that anyone can come to the network and present issues, it's going to be a massive game changer. So the dashing in will happen at some point. I can't tell you when, but when the bull market goes up, you're going to see all kinds of people come to the treasury. We saw it last time with many leading individuals, from championship MMA fighters to all kinds of things. And now you're seeing other projects like trying to do things that Dash has already done. So in many respects, we're innovator and pioneer in this field in that respect. So I didn't mean to be lecturing you, but I think this is really important information for people watching, because
it's excitement spaz. It's different
because
from a lecture.
Because people get stuck on CoinMarketCap pressing F5 and refresh, right? Because they get emotionally attached to their money. But at the same time, you've got to think, what am I doing this for? What's the end game, right? I don't want to be a momentum monkey, jumping in and out. I don't want to get involved in stable coins, because I'm not a day trader. I'm not a swing trader. I just want what's the best solution. I believe in the free market, right? Competition inspires innovation. I thought Bitcoin was amazing. I had personal issues because it wasn't doing what I wanted it to do. So I found something that had the same values, but had advantages on top of it. And that's where I'm at right now. And I think when we launch Dash Ventures, which means, I don't know if you've done any research into that. I mean, why don't you do a research report into Dash? That would be amazing. I would love that. And I don't know how much time or funding that you would need to do that, but Dash is doing so much. And the fact where previously in the treasury, if, for example, you was a big business or an exchange, you wanted to do an integration, you could put in a proposal and say, like, well, if you pay for this development for this proposal fee, we'll integrate Dash. So it's kind of like a grant, but with Dash Ventures, we can take ownership. So we can start, we can have businesses come to us that aren't even cryptocurrency related, right? You could be like a taxi service, but that money comes back into Dash, right? And we use that Dash to buy off exchange. And we're already very, very scarce. There's not that many Dash on the exchanges, right? So, and people can't comprehend this yet because it hasn't been done elsewhere. What happens if we bought up cryptocurrency ATMs, for example, right? Now, these ATMs, like say, for example, General Bytes, people can buy Bitcoin, Litecoin, Bitcoin Cash, everything else. Well, we would profit from that business. So we'd actually profit from other cryptocurrencies. We could have no fees on Dash. Like anything you can imagine, you could come to Dash Ventures and say, I want to run a hedge fund through Dash Ventures, and I want to manage my own portfolio. Look at the other projects. There's so much unlimited possibility. And we haven't even spoke about Dash Evolution, dApps, Dappy, Dash Drive, running our own internet. Dash has got so much going on, but people don't have any idea. So I think if you are interested in doing a report, I would gladly connect you with people within the Dash team. No pressure. But when people like Andreas Antonopoulos are doing like mastering Bitcoin, mastering Ethereum, it's kind of like, you know where it's really at? You should be doing a book on mastering Dash. Or if you don't want to use the title, just say mastering governance, decentralized governance and blockchains. And I tell you what, to fund the book and to write the book, you should submit a proposal to the network and use that as an example in the book of how it works, how to get funding and everything else. That's how it should be done.
I will tell you one thing that's pretty cool. So I teach a course on blockchain technology at the University of Liechtenstein every Monday, and I've been teaching it for the past 3 years. And 3 weeks ago, we had a guest speaker so I contacted the Dash embassy in Germany, or they contacted me, I can't remember, we were in contact already. And then I asked somebody from the Dash embassy in Germany to come to the University of Liechtenstein and present on how to submit proposals so that all the students could learn how to submit proposals and like just learn about Dash in general, right? And they didn't have anyone available, but they said like another person can come, and actually that person was actually already a friend of mine. So he's a really big Dash advocate. He came to the university and showed them all how to submit a proposal and then offered to sponsor the fees for the proposal to be submitted and everything like that. So now one of the group projects is going to be, like right now they're in the brainstorming session. They're trying to figure out what actually makes sense by analyzing the other proposals and seeing which ones are winning and which ones aren't. But we're in the process right now of trying to get the students to submit a proposal just because it would be so interesting for them to get in touch with the DAO, and to understand how this works. So I think that for them, this is exciting. And then also, of course, most of them don't have jobs. So, I mean, like, this is like potentially a way to learn about cryptocurrencies, how to earn income. And so that was pretty exciting. They really loved that presentation on how to submit proposals. But I think mastering Dash would be an awesome book idea. Right now I'm like up to here with work, but the reason we haven't covered Dash so far in the crypto research report is because, well, one of our previous sponsors was a pretty large private bank, and we also, sorry, there's some commotion outside, but we also have our custodian bank, who still to this day, it's unclear whether we can invest in any privacy coin. And I think that basically for us, we haven't focused on it because we technically not sure if we can even invest in this yet. And so we haven't had the incentive to, I mean, because I'll invest in it on my own and like research it on my own, but to do a full-fledged research report, we would need to have some kind of ability to then take what we learn and either short an asset or buy an asset, and trade the asset. So, but I think that's a great idea, and I do like Dash a lot. So if nobody else gets going on that project soon, I mean, maybe once I have some time, I can try.
Yeah.
To stab
Well, absolutely, give that a shot if you can. It seems, in my experience, that people largely overlook, like, this is like, I'm trying to be unbiased here, even though I'm clearly not in a position to say so. But when people tend to go deep on Dash, they tend to stay. And I just recently interviewed Andreas Brecken of the illustrious research publication shitcoin.com. And it's such a deceptively named site because he goes deep on crypto projects. He compiles the source code, runs the node, sends and receives transactions, does all the things that it's meant to do. Like, it runs light wallet, then let's try to buy something with it. Let's try to do this. And then, so for his legendary Dash performance, he heard that he thought Dash was a scam because a lot of people said so. And he's like, yeah, whatever. I'll review the scam, see what it's like. And he got converted into a believer because he downloaded source code. He ran a wallet, sent and received. He tested out the special functions, bought something, thought this is great. And then he wanted to know how the governance system worked. So he submitted a proposal, which ended up being funded. And then he wanted to know how to vote on stuff. So he bought a masternode at about 300,000 USD at the time, and just like ran the masternode and voted on the proposals and stuff. And then after his great experiment, because he moved over some Bitcoin right into Dash for the masternode. But then after the experiment, he decided to keep the masternode because he was so impressed with how the whole thing worked. And so he turned into a Dash fan and believer from just thinking it was some like worthless scam thing because everyone said so, because he went that deep dive. He went the deep dive on the Lightning Network too, which was hilarious when shitcoin.com was the largest node on the Lightning Network for the longest period of time, and everyone was very upset about that. But I would, anyway, illustrious research publication shitcoin.com, go there. But also, I encourage as many people to do similar deep dives as possible.
I definitely think that's great. And Joel and Mark, I really appreciate you guys having me on tonight. It's about 10:40 p.m. where I'm at, and I have a exercise routine in the morning, and I got all sorts of stuff planned at this spa clinic spa hotel where I'm spending the weekend. So I have to go, guys, but it's always a pleasure, and I hope that we can hang out again soon.
Cool.
Yeah,
absolutely.
no problem. Thanks very much for being on.
Right. So crypto research. So no, what's the website again to download the report?
Cryptoresearch.report.
Right. Okay.
It's called Incrementum, and we produce 2 reports. One is In Gold We Trust, and the other is the Crypto Research Report. And basically, we have tons of questions that come up when we're investing, taking investment decisions, and we use that opportunity to basically publish what kind of information we came across during our research journey. So we hope that it's free publication. It's available in German, English, and Mandarin. We always like more readers and feedback. Anybody has feedback, we are so happy to hear from our readers.
And your Twitter profile is @CryptoPhD.
Exactly, Crypto PhD.
That's something to remember.
Excellent. Well,
yeah,
okay.
mine is crypto associate's degree. Not really.
Right.
Long for a Twitter handle.
Right.
Yeah.
Well, if you do have any questions that we didn't get around to asking, if you put them in the comment section, and maybe not tomorrow, as Demelza's got she's at a spa, but in the next few days, you can check the comments and then hopefully reply to them if you have any questions or want to know more information. So thank you, Demelza. I'll let Joelle take us out, but you're welcome to leave now, or you're welcome to stay till the end. It's up to you.
Okay, guys, have a great night, and thank you so much for having me on.
Excellent. Thank you very much. I'll be in touch soon.
Bye-bye.
Bye.
Cheers.
Well, this has been episode 102 of the Dash News podcast. And this has been episode 2 of the Demelza Gets Locked Somewhere and Experiences Technical Difficulties podcast. But as has been stated elsewhere in comments, etc., it seems like her presence is very much appreciated. Definitely one of the sharpest cookies in the space. It helps to, I do like that sound investment and economic knowledge, and just that mind towards not just, I like this and this is what I think of, but just coming up with a set of objective criteria for evaluating the world, and then just following research findings rather than doing rage research into like why you're right, just like most of the cryptoverse. So thank you very much for coming on the podcast. Guess what? We also have the after party. StayDashy.com gets you into the Dash Talk Discord, the only good Discord out. Just kidding. No. But one of the best Dash Discords in the world. You come there, you start asking around, where's the after party at? And Mark or someone else will plug you in. It used to be up to 10 people at a time. I believe we can do more. What was the most we had, Mark?
I think we got up to 18 last time.
18. So can you imagine, what is it? 6 times the amount of people that were in this podcast all at the same time. Some of them sleeping, but mostly not. And then just talking till the wee hours of the morning, sharing a pint, whatever, just keeping the Dashy talk going. And it's a good time. I will definitely be there at some point. So StayDashy.com, start asking about the after party. Go do that. Otherwise, I don't know what to do with you, hater.
Well, that was episode 102 of the Dash News podcast. I hope you found it to be informative. If you've enjoyed this video, please press that like button, smash for Dash, and don't forget to share and subscribe. Have a fantastic weekend wherever you are in the world. Stay positive, stay humble, but most importantly, stay dashy. Have a good weekend, everyone.
See you guys.